If we look at the start of the year, definitely this year we've got the best start since we have data. So definitely the optimism about AI development has triggered investor sentiment. So that's why we have seen, led by the internet sector, MSCI China has rallied around 30% since the trough in January. We have seen a meaningful re-rating on valuation. But in the near term, we've also noticed that, especially on the internet sector, earnings have been revising up as well. So this time we see the rally may be slightly different from the previous rally because people are having more hope for the improvement of mid and long-term earnings growth. Based on our estimation, we estimate that the AI development or adoption could boost the earnings by 2.5% annually in the next 10 years for MSCI China. So that's why we think this time the rally could be more sustainable if fundamental improvement can be delivered. So technology development is definitely much more important than previously we have the policy-triggered rally because fundamental improvement could be the key driver for mid to long-term rally.
So, Sifu, that also suggests that you see potential multiple expansion ahead as well and price appreciation because even after such a strong start, and this is, as another guest noted, the strongest start the Chinese markets have ever had in history, it's still trading at 12 times, which is almost ridiculous when you take a look at, after the pullback on Wall Street, we've got the S&P at about still at 21 times.
Mm-hmm. Yeah, because this time, if we look at before the rally, for MSCI China, the valuation was below 10 times. So even after the rally, we are closing to 12 times. That is our fair PE forecast. So even after the rally, we have to say the valuation has not yet been stretched. But as it's getting closer to our fair PE forecast, we do think the rally may slow down a little bit to wait until more fundamental delivery, especially earnings to materialize. And also, besides the internet sector, if people can turn more bullish on other sectors, we may expect that may also support the rally.
Sifu, let me ask you, you're looking for a bit of a pullback, right? Also because the U.S.-China policy and geopolitical calendar is going to turn active again. Are we not already seeing that, or what are you expecting ahead?
I think so far this year, people are kind of feel a little bit relaxed about U.S.-China relations, especially when the first time the tariff announced was 10% additional tariff announced, which was slightly below market expectation at that time. So that made people a little bit relaxed about U.S.-China relations. But after that, we have seen the American First investment policies was announced, which have triggered more concern about the potential U.S.-China tension re-escalation, not only in the trade area, but also in capital market, in technology, similar as in 2020-21. So that caused more concern as we see a potential risk in the near term that may cause some market volatility as well as potential valuation derating.